My journey as a banker started in 2008. Like you, I'm also a computer engineer. Like you did a mechanical engineering. I did computer engineering and then did MBA from SPG and become a banker. No idea of sales and learned sales, hardcore way of selling. I'm sure in the banking, you have so many. I'm sure you have wealth management division as well. And from there, I rose to unit head. And one fine day, started this company called Client First Group. It's become a family business. My wife is also a partner in the business. And gradually, under the leadership of Ramdev Agrawal, if you know Ramdev Agrawal, I'm sure you know him, Ramdev Agrawal from Raipur. And we also belong to Raipur. And I had my father's spiritual heritage. So we have a temple. Father has written 14 books. Unfortunately, we're still not able to promote him as a panelist. And that has a deep impact of being very honest and ethical about whatever we do. And at the end of the day, you will not take anything from here. All will be left over here. And that is the very essence of the wealth management, and which is I see in you. And today we'll come to know more about it. So of lately been curious once the role is changed to the wealth manager. We have also understood that managing money, and I'm sure even running a big bank like yours, is really close to being a very spiritual person. You might do it for 5-10 years by other means, but in the long run, you have to come to God. So we're very fortunate that this way or that way, this has happened with us. Now, that's said about me. Now, let me introduce you formally to all my audience. Many people have joined. Welcome guest. Today, we invite all of you in the Perfect Recipe for Retiring Rich series, where every month we do an educational webinar on money. We feel that the knowledge of money is made very complex and it has to be simplified. You can subscribe the Client First Capital channel. This webinar is absolutely educational. No names shared in the webinar are a recommendation to buy or sell any particular share. The views expressed here are absolutely individual. Dr.N.Kamakodi does not need any introduction. He has been managing City Union Bank for roughly, he's joined the bank as a CEO and MD in 2011. And now I think it's a 10-year. It really says a lot about the bank, the culture, and about him. The bank has grown 120 times since it is listed in 2001. Bank is roughly 100 years old. And the most important aspect is when you talk about the bank in the North India, very few people are aware of the bank. So when you tell them City Union Bank, they say, what, Union Bank or City Bank? So the thought came to my mind that it's a great way of taking the good company to the in the tongue of the people abroad, the tongue of the North Indian people, and also understand from the CEO of the bank that how does he run the bank. So we will talk in three aspects: the past, the current, and the future. Dr.N.Kamakodi, I welcome you, formally welcome you to the Perfect Recipe for Retiring Rich. Let me give you a brief introduction. So you joined the bank in 2003 as a DGM, and then you got elevated as a post of GM in 2005. And then you become ED in 2006. That's a remarkable journey, quite a few good promotions in roughly 3 years. You have an excellent background, educational background. You did your master's and PhD from China. You were the one who introduced Lakshmi robot, which was the first banking robot in the history of bank. I recently also saw that you have launched a debit card, a keychain debit card, which I think even Dubai, we don't have it. So congratulations for these things. We have also noticed that you have been growing the bank return on equity is roughly 20% for last 10 years. So that's also a great job done. So we would love to hear your personal journey before we go into professional journey. I also want to tell you that this interview is not like a typical equity analyst interview. We are more of an investors, and I generally manage the global portfolio. We are doing it to learn from you. Somewhere we also would like to reciprocate this goodness of yours to the masses so that they know more about your bank. So please tell us about your journey, your personal journey.
Thank you, Bhuvan. Good that we will start with a few information on the personal journey. Basically, you may be surprised to know I'm a third generation employee of the bank. Somebody from our bank is associated with the bank for past 75 years or so in various capacities. In that way, it became my responsibility sort of to join the bank. My father had run the bank between 1980 and 2004. Before him, his uncle was running the bank. My father was a chartered accountant and his uncle was a lawyer. More than shareholding or anything else, being a local bank, probably the local community felt that our family should be there representative to manage the affairs of the bank, and that's why the things stayed that way. So I am basically from a village called Tippirajapuram, which is about 7 kilometers from the temple town of Kumbakonam on the bank of river Kaveri, where our headquarters is located in. I started my elementary education in local school in Tamil medium. Then for my high school, for 6th standard, I moved to the Kumbakonam town to town higher secondary school, which recently completed its 150th year journey, where the famous mathematician Ramanujam studied. Post my plus 2, first got admission in Annamalai University, then got admission in, then at that point of time, what was called as Regional Engineering College, Tiruchirappalli, which later became National Institute of Technology in chemical engineering. After my chemical engineering in campus placement, I got a job with Reliance Industries in their Hazira manufacturing division in the projects. I worked as a planning engineer for 3 years, and later, towards the later part with commissioning of pure terephthalic acid plant at that point of time. Parallelly, I got, like say, I was trying to go for, like say, MBA, particularly from overseas institution, but my father told me that I should not go to US. Probably he felt that anybody from the family going to US, they may not come back and all. He wanted me particularly to be here in India. So alternate thing came from the Chinese University of Hong Kong, which also offered opportunities for scholarships and all. So in, from 1998 to 2000, I completed my MBA from the Chinese University of Hong Kong. And then I joined my brother to start to have a startup in the BPO somewhere in 2000. In that period, I represented Hong Kong in a business plan competition with this BPO in the University of Texas, Austin, a competition called Mookar Pandal. But later, probably we were slightly ahead of time, but at the same time, I was called to the bank and I was asked to join as head of deputy general manager, planning and development, and also on HR. So the first major assignment that was given to me was that was the time when the concept of corporate lending had actually started. At the same time, I would like to give a brief background about the bank also, which will be giving you some idea, so that at this point, both the bank and myself, since we are getting, like say, getting aligned. As you said, we are the oldest listed private sector bank in the country. The bank was started in 1904. If you just try to get a background about the banking industry, the oldest bank in service today is State Bank of India. In earlier avatar, it was Imperial Bank of India, which itself was an amalgamated entity of 3 colonial banks called Bank of Bengal, Bank of Bombay, and the Bank of Madras, which merged to become the Imperial Bank. And all these colonial banks had their origin somewhere in 1803 to 1806, in that range. The next set of oldest bank in the country, you will be surprised to know, they were all foreign banks like Standard Chartered Bank in their earlier avatar of Chartered Bank of India, Australia, Asia, or HSBC, or even French Bank and all. They started their operations somewhere in 1850s. So if you take French Bank, they had like say branches in almost all coastal towns, including Pondicherry or Tuticorin and things like that. The next oldest bank which was promoted in the country is Allahabad Bank in 1870. which recently got merged with Indian Bank. Once again, which also had their opening through they had their colonial beginnings.
Yes.
The oldest Indian bank today in existence is Punjab National Bank, which was started in 1895 by none other than freedom fighter Lala Lajpat Rai out of Lahore, then which is shifted to Delhi after the partition. So the next oldest bank in service today is our bank, which was it was established in 1904 as a part of Swadeshi movement to support the local commerce and commerce, agriculture and all. The original name was called the Kumbakonam Bank Limited. The Kumbakonam is the town from which it had its origin, from where I am currently talking to you now. The Kumbakonam also gave birth to another three banks called City Forward Bank, Union Bank, and another bank called the Commonwealth Bank. Okay. They all merged to become the Kumbakonam City Union Bank way back in mid-50s and mid-60s. Later, in mid-90s, the name was brought back to, the City Union Bank. The word Kumbakonam was lifted. Okay. So it originally, the foundation is to support the local commerce and trade. It had always been positioning itself to support our agriculture, small-scale industries and things like that. We had a humble beginning in the Kaveri Delta region, and beyond that we moved to Coimbatore in mid-70s, then to Bangalore in 80, then in the Hyderabad in 80s. And slowly and steadily, the bank had its 100th branch somewhere in late 90s. And it was taking a shape, and even though it was one of the smaller banks, you will be surprised to find all the banks, they wanted to remain small for the fear of getting nationalized. The banks in the country can be broadly divided in the way that you had banks which were promoted by the, industrialists. Almost all of them were nationalized. Like your Indian Bank promoted by Chettiars, or your Central Bank of India, which had connection with the Tatas. You had UCO Bank, which was promoted by Birlas. Like that, all the banks which were promoted by the industrialists were nationalized somewhere in 1960s or early 1980. Then you had a lot of community banks, some banks like a Canara Bank or a Corporation Bank and all, which grew bigger, but which were not, which were also got nationalized. And you had banks which were promoted by Maharajas, which became the subsidiaries of State Bank of India, like your State Bank of Hyderabad or State Bank of Travancore and all, which later got merged with the State Bank of India. Bank of Baroda also was promoted by the Maharaja Gaikwad, but it remained as Bank of Baroda, did not become the subsidiaries of State Bank of India. You will also be surprised to know the, the South Canara, Mangalore had the district, had the, maximum number of banks, followed by Coimbatore and districts of Coimbatore and Thrissur. In Coimbatore, no bank basically survived. So in that way, the other banks which are promoted by local communities, be it Karur Vysya Bank, promoted by the Vaisya Chettiars of Karur, or be it Karnataka Bank, promoted by the Brahmins of South Canara, or Tamil Nadu Mercantile Bank, promoted by Nadars, or even for that matter, Vaisya Bank, which later merged with ING and then with Kotak and all. Bulk of these banks which are promoted by the communities, they stayed small, and they also wanted to continue as a smaller bank for the fear of getting nationalized. Okay. Things changed when the liberalization happened in 90s, but the entire DNA of the bank had to be completely changed. Say, for example, from the people, processes, technology, everything, because one of our peer banks, Bank of Mujra, was taken over by ICICI Bank, and a new generation bank became our next door neighbor. Since new generation banks did not have, say, for example, any, baggage or had deep pockets in terms of capital, all of us took close to 100 years to have 100 crore net worth. But all those banks were asked to start with 100 crore net worth directly. So it was an uneven, it was not a level playing field, but we had to compete. Nevertheless, we were, even though we were one of the smaller banks, we remained as an efficient and profitable banks today. So we are already, we have completed our 17th year. In all the 117th year, 17 years, the bank had made profits and declared dividends. In fact, even a year before last, when there was a regulatory, stoppage of paying dividends by the bank, since our bank had paid an interim dividend earlier to that, we maintained that continuity in terms of dividend payout track record and all. So in that way, when I joined in 2003, it was immediately after sort of the 99-2000 downturn, particularly after the Y2K and all. You had a slump in the economy, and the prudential norms and all came, which became counter-cyclic. Virtually at that point of time, close to 15% of the banking assets were NPA at that point of time. If you had tracked that 20 years back, the problems of 2017 and all would not have been a big thing for you. So even though we were we were also part of thing. So when subsequently the minimum net worth criteria of 100 crore came, then it was increased to 200 crore, then to 300 crore. Every time when the net worth criteria came, we used to be below that, and always there used to be in paper, say the business magazine saying that these banks don't have minimum net worth criteria, so these banks have to be merged with some banks and all. So it was too much of that. So I thought we made a calculation and kept a conclusion by 2010 we should be having about 1,000 crores of net worth will be the minimum net worth criteria. At that point of time, almost the entire net worth was plowed back profit. So if we continue in the same way, we should be having about 600 to 650 crore, and we will be needing about 400 crores of external infusion of the capital. And we started meeting investors. Okay. So when I started meeting the investors and all, there used to be always questions like the 4 or 5 questions. The first question used to be, who are all your top customers? So we are bankers for small and medium scale enterprises, commercial trading, agriculture and all. We never had big names in the industry. So that used to be, even the rating agencies used to make fun and all. At least they did not take these things in a proper perspective. Yes. And one of our peer banks at that point of time had in fact started the corporate lending. So I went to explore that. Through them, I started meeting the investment bankers who had been active in the corporate lending and all. In the year 2003, we had our net profit somewhere about 58 to 56 crores or something around that range. The minimum ticket size needed to be a participant in the corporate lending consortium used to be about 50 crore, which means it is about 1 crore profit. So the perception was that the bigger corporate lending never fails. So I went and met about 10 investment bankers and asked them how many years you are in business and how many failures you have seen. So all of them said one failure in common, which was Enron Power Project at that point of time. So I came back to the board and replied that if you turn the clock back and if you want to make a corporate lending, who else will you give apart from giving to Enron? But if it fails, your 1 year profit will be gone. So it is beyond our risk appetite. So let us not get into that. It is beyond our risk appetite. We decided that. So we don't have any convincing answer for who are all your customers. The next question used to be on what is your CASA ratio. We never had great CASA ratio. We don't have a great CASA ratio. We will never have great CASA ratio. Our entire funding is from retail term deposits only. And even if you look into the CASA, you break it, a larger chunk came from the, the government fund management, which is taken over by the government-owned banks. The second comes from the stock exchanges related floating fund, which is taken over by the new generation bank. So the third, corporate and other salary account, once again taken over by the banks which are in consortium, inclusive of both your new generation banks and old generation public sector banks. So we are left with only Aam Aadmi CASA only. So we don't have great thing to call about there. The next question used to be on the what is your fee-based income. Okay. We only do banking. We never concentrate much on insurance sales or mutual fund sales and all. We take deposits at X, lend it at X+3 or X+4. We told our focus is on core banking, but not on this thing. The next question used to be on technology. Now our technology is at par with the best in the industry. As we told, we are like say having many of like say our initiatives are first in the industry and things like that. But in those period, we were just in the process of migrating to core banking and all. We did not have a great thing at that point of time. The next question used to be on NPA front. As I told you, we were part of the system. We had NPAs at that point of time. But even when we tried to convince him that our ROAs or ROEs or cost to income ratio or net interest margin, you take any efficiency or profitability ratios, we are in top 10% of the industry. Nobody was prepared to accept that fact, but this was the case.
Yes.
So our first breakthrough came when one FII called they took investment in the bank, and then Ruin Kanif Golfab, who contacted us after picking up a stake, and they only told that, like say, when they sorted our performance data for 20 years and all, our name was coming in top, and that's why they have taken a thing and all. So major breakthrough came when the L&T was interested in, Lasan and Tubro was interested in taking 10%. We were prepared to give shareholders approval for 10%, but regulatory approval came for only 5%, and balance 5% was taken over by LIC, which is the largest shareholder of L&T. Along with that, a few like say multilateral financial institutions and all participate. So nevertheless, from that point, we had always maintained a cautious approach. We had always grown about, like say, a few percentage point over and above the growth rate of the industry. We say we are like say test match players. We are not a 2020 players. We being a bank with more than 115 years of continuous track record and all, we have to take care of all the stakeholders. We are not in a hurry. Nothing, heaven is not going to fall on your head. So stage by stage and step by step, we are like say the mandate given to me is that whatever that is needed to see the bank in a much better shape than what it is today, in the next 100 years is what is the mandate to me. So I cannot afford to take any short-term like say measures or do something in a hurry and all. I think by God's grace, whatever we had taken so far had happened smoothly and steadily. By and large, even during the COVID period, initially we were also not having a grip on what was happening, but once it took a shape, almost everything happened in the way we anticipated and prepared ourselves for, even better than what we anticipated. And whatever we shared with the like say investors and stakeholders, that our expectations on the COVID thing and all, we are by and large on dot. So everything has come back to the pre-COVID level. The growth is also getting better and better. So financial year 22-23 should be much better than what we are seeing, and except whatever few percentage points damage here and there because of the COVID, everything is fine, and we are back on track to our pre-COVID level is where we are in. I think it will summarize the past, present, and the future.
So thanks a lot. Wonderful. It feels like your family has been into the business since the East India Company has come to India. Very long history actually you have given. Let me tell you, Dr. Kamakodi, I'm absolutely not surprised when you told me that you are a third generation employee of the company. What I'm surprised now is that your journey is not straight. As it looks that you joined the bank and just grown, you have actually done a lot of things before joining the bank. So what we did a research that in 100 years, you had only 4 CEOs.
7.
So, is it 7? Okay, sorry. So yeah. 7 CEOs you had. It seems like, so first of all, I want to ask you that, so 7 CEOs which you had, they're all somewhere it seems like you're running the bank as a Guru Shishya Parampara, like a mutt, like people are very close, this thing, and the defaults are very less. So what exactly, because even before you joined the bank was doing great. So somewhere the ethics and the honesty has been already ingrained in the culture in 1904. Who's that person?
Absolutely. See, the one of the our my colleague executives who retired a few years back, who used to say it is the auspicious time on the like say on 31st October 1904, the certificate of incorporation was received. On 1st November 1904, the bank actually started its business. So that was the most auspicious time, is something which has to be properly given credit. So the first CEO who like say put a proper perspective for the bank was, I mean, if you had a chance to look into the history, like say, I learned many things when I was doing my PhD. The first set of bankers were predominantly lawyers. The logic was that whenever you are in banking business, you will always have defaulters and you will always have litigations. So the first, like say, generation of for bankers up to like say mid 60s and all were basically lawyers. This is what we found out. It was one Mr. Santana Iyer, like say, who had founded the like say, who was the first chief executive in that point of time. It was called the secretary. That is linked to closer to MD or CEO or whatever it is. And remember, it was started before the, I mean, incorporated based on the Companies Act 1882, and it was before the arrival of Reserve Bank of India or Banking Regulation Act. So keep it in the proper perspective.
Yes.
Mr. Santana Iyer had his tenure up to like say mid 1920s. Then another Mr. Mahalingam Iyer, who took over from 1920s, mid 20s to 1960s. He was also a lawyer.
Okay.
So he like say relinquished when the merger of the banks takes place somewhere in 60s, after the what was called as failure of Palai Central Bank in Kerala. The Banking Regulation Act and all were tightened, Reserve Bank supervision and all were tightened. Lot of smaller banks were merged to become larger banks and all. That was the time when the merger somewhere happened. So at that point of time, there was one Union Bank for which the CEO was Mr. Narayanasamy Iyer, who happened to be my father's uncle, who became the CEO of merged entity. And from him, like say, there was one Venkatramani Iyer, who was also a lawyer. So up to this point, up to 1969, I mean, for the first 65 years, it was headed by, like say, the lawyers. At that point of time, like say, these persons were predominantly, many of them were, like say, it was not like they were full-time CEOs. They were part-time CEOs at that point of time. They also had their other activities and all. So the Reserve Bank at that point of time brought in a rule that it has to be a full-time professional thing. And we had about, like say, close to about, like say, 10 to 12 years period, when we had two Srinivasans successively from Reserve Bank of India, who ran the bank. And my father, who had completed his chartered accountancy, joined the bank in 1971 as assistant secretary. Then he became the chairman and CEO. Who learned banking from those who got his training from these professionals from the Reserve Bank of India. So after which he took over and he ran from 1980 to 2004 till the like say time of his demise in a car accident. After him, his deputy, Mr. Balasubramaniam, who also joined the bank in 1970. 71. He ran the bank for like say till 2011. So I had joined almost one and a half years before my father's demise. Then I like say I had my training under Mr. Balasubramaniam, and like say my approval to be CEO came in 2011. So this is how the entire transformation happened. From after that, you had chartered accountants as bankers. And now it is getting into the engineers with the knowledge of technology is becoming a requirement now.
Wow, amazing. Okay, we got that. I think I really understood that the way lawyers have taken over and then the CAs have taken over. Now the technology is the demand of it's all becoming fintech. Thank you for giving that perspective. It's really something to learn from. Now, Dr. Kamakodi, when you became the CEO, such a great legacy you have in the business, what challenges do you face? Because it's not easy. because once you came in with technology background and people, I'm sure the mindset is the biggest challenge in any bank. I know the culture was set. So one question is still not answered, Dr. Kamakodi, that how did you bring that ethics of honesty? Because the government banks, such a high corruption is there. We know it. I come from a background where my father is a government servant, ex-government servant. How did you tackle, how the bank tackle, have you never been charged for any corruption in the banking history? How bank managed to?
The important aspect for that is, the bank did not have a mindless growth in 70s and 80s. That was when the expansion happened everywhere, which ensured that the proper supervision and control from the central office is there in all the branches which were in operation at that point of time. So you never had the computerization and all started happening only in late 80s and early 90s. Till the technology developed to what it is today. At that point of time and all, you need to delegate more powers to the branches, but it will be very difficult to monitor what was happening and all. So since the bank had a very tight control up to the time of arrival of technology, the culture and the DNA of the bank was properly set. So it has over and over again that Yada Raja Tata Praja. So the entire organization's DNA is basically defined by the persons. So since the bank had the fortune of having continuously a stream of stalwarts who had at the helm of affairs at a reasonably longer period, who could have a total control over the system, the culture was properly maintained, and for which once again the not only the God's grace probably which has come through the the auspicious time at which it was opened.
Before I will move into the banking side, I think one thing which I am noticing while talking to you, that we talked about your professional and personal life. We did not talk about your spiritual life. It seems that you have a proper guru and you have also gone through the scriptures. Can we know something about that?
See, we traditionally we belong to the families of Sishyas of Kanchi Kamakodi Peetham. My name itself comes from that name.
Okay.
That's why traditionally our entire for generations we are Sishyas of Kanchi Kamakodi Peetham and maintain a very close association with the MAT, which has also kept the for about it could also be a reason. You will be surprised. The link between the local bank and the MUD. The headquarters of the Kanchi Kamakodi Peetham was in Kumbakonam for a couple of centuries after the what you call not so good times of 17th century and all in Chennai and Kanchipuram and related part of the world. So the presence of the mud here also should have given a proper perspective to the ethical value of the locality and particularly the thing. And even since when you are asking this question only, this is coming because all the previous CEOs except even in the two RBI nominees except one, all others had come from the traditional Shishyas of Kanchi Kamakodi Peetham.
That's very, very good to hear from you. I want to share something with you. I'm sure you would have heard about Peter Lynch, one of the famous fund manager. Peter Lynch. Okay. Mr. Peter Lynch is one of the famous fund managers. Even Warren Buffett has a great regard for him. So he wrote in his book, there is this area in America where you have a lot of it's a hilly area, and there are this traditional banks like what you are in India, and these banks, the customers who put in the fixed deposit, they're small customers of that hill area and all, they are not yet got into that city kind of the culture, they do not first of all default, and their fixed deposits are sticky. I think there is a need to write a book also on the part of what you told just now about the historical culture of the Kanchipuram. That is something which is very important. So my question linked to this, and now I'm going to the professional side of the bank, that do you feel that your investors are also your basically fixed, because your investors are the fixed deposit customers and your lenders as well are very sticky with you, and you see that NPA is just a temporary phenomena because bank has to disclose it because the payments are coming delayed, but they can never be a default?
See, what you said is, like say, definitely true to a great extent. But the demarcations are, like say, diminishing over a period of time when the expansion basically happens, in which you don't have much control. Just to give you an idea, like say, in 2003, when I joined as a part of our ALM management, the term deposit rates at the market was about 6%, and what we were offering was about at least 100 to 125 basis point more than what our neighboring banks were offering.
Yeah.
So our MBA studies teach us that we have to be efficient on cost. So I proposed that we should align that cost to the, like say, market, and why should we pay the premium?
Yeah.
So the reaction came that, like say, for almost all our depositors, this is perhaps one of their main sources of income, and it is the responsibility of the bank to observe that, and we have sufficient profitability to manage that. There has to be I mean, the balancing of multiple stakeholders was something which was, like say, already we are generating enough return on equity and all, it is sufficient. I mean, it was something like say, I couldn't relate to that when I started, but I learned it over a period of time.
Yes.
But the fundamental issue basically comes from, I told you we did not go to the what you call corporate consortiums. We like say for almost maybe not less than 90% of the customers, we are the sole bankers with the total control over the assets and cash flow. And we continue with the conventional banking practices which are time tested, starting from how will you choose a borrower, how to like say what is the importance of collateral, the risk management and all have been imbibed. And yeah, you get into some trends every 3 years or every 4 years, saying that you are doing business not in a good way, you have to change that and all. After 4 or 5 years, you don't see a sustainable business model from that. Similar thing currently is your automated small ticket lending through fintechs.
Yes.
Everybody talks about the loan dispersal and nobody talks about the loan recovery when you talk about that.
Yes.
So, which is the most important aspect of the banking, to have a sustainable, like say, business in that way. So that is the, like say, the following the time tested. I mean, not compromising too much with respect to the conventional time tested banking practices is one of the reasons. So our experience is that, like say, pre-COVID period, we used to have about 2 to 2.25% slippage to our closing advances as the slippage. During the COVID period, it increased to about 3 to 3.5. It should be getting back to the pre-COVID level going forward. But we always had, when 100 rupees slips, our recovery rate is about 70 to 75 rupees. Only 25 to 30% of the slippage actually is credit loss. Remaining all, we are able to recover by subsequent methods, be it upgradation or be it sale of collateral or whatever it is. So the adhering to the time-tested banking practices without getting carried away by, like say, unsustainable ways for short-term benefits, I would consider is something which is in the ethos of the bank.
Okay. So the one very important question that I think we would like to learn from you is, how did you handle the demonetization? Was it something very common for you because you were already in the small area, or there are a few learning which came out of demonetization which we would love to know?
See, knowingly or unknowingly, we had, nobody anticipated that sort of a shock. We had been running, like say, we had done certain things which had helped us. The first and foremost thing was, even though we are bankers for small and medium scale enterprises, we had instilled discipline with our borrowers on the cash flow. Like say, even though we take collaterals, we are not 100% dependent on the collateral. We had always repeatedly asked about the cash flow, what is the sales, where is the money going, and all. Even though, like say, the part of the SME segment, which was by and large unorganized at that point of time, without giving required importance to those sort of things, they failed more. So right from the beginning, since we had instilled, like say, the importance of being organized, having a control over the cash flows, writing a proper accounts, and having a total control over that and all, since we had built that culture right from the beginning, that has helped us to them to ensure that they are, like say, they are not, even though they had their own share of impact because of the demonetization, it was not as much as their own counterparts who had run it like say more not in an organized way.
Okay. Dr. Kamakodi, now coming to the employees, the most important thing today is the people. I think sooner the CEOs realize this, and the banking is the best industry because the asset which you have is the people. And when I was going through your books, and I found that you have a 7-year of the vesting period of the stocks, I was so surprised because even Amazon has 5-year period. So we want to learn from you how the employee retention has been done. What is the turnover of the employees in the business, and what's the future for them?
See, the how we are clearly giving out is that like almost 95% of the people entering our bank will be freshers. Okay. We take fresh minds, maybe from the like say graduates or postgraduates, like say MBA and all. Most likely from the like say Mufassal institutes, from the campus interview. Okay. They form the like say maximum portion of our freshers. We take them at the entry level. We train them at the systems and procedure. We train them at the with the like say credit appraisal, credit monitoring, credit processes. We train them at with your what you call to be like say in sales and things like that. So our the way we give promotional, you might have seen our branch network almost multiplied by many times in the last multiple years. So in fact, another major important thing I had to face was in 2004 when I joined, 2003 when I joined as head of HR. We had like say a generation of the people. Some of their counterparts had gone to new generation banks. Some of them were like say earning good amount of money. So one of my objectives which I kept for me is that nobody should have that cribbing that when they got offer from a new generation bank 10 years back, they should have gone. They made a mistake by joining the remaining in the bank. That was one of the objectives which I kept. Yeah. So in like say 2008 when the concept of ESOPs and all were announced and the rules by SEBI and all were which came around that time. So we ensured that every CUBN, including from the peon to the senior most executive, everybody is got as the part of the like say ESOP system. Every confirmed employee of the bank became our shareholder. So we continued that for many long years, and everybody made like say good growth, particularly on the personal asset front because of the value creation by the bank, which also convened. We have our own officer association, we have our own staff union, and they also understood that this value creation is much more than whatever they can see in the. We have our own like say bilateral settlements and things like that. So which convinced them to have a long-term career, and 90% of my top management team are with the bank for not less than 25 years, and that continues in every layer. The career path which is given to the every new CUBN who is joining is that you are at the entry level is that by the end of 5th year you should be eligible to be considered for the head of a new branch. That is how we train the people and take it forward. So our like say if you take the maybe like we have, it is not that we don't have any resignation or whatever it is. Those new employees who are not able to understand this or like say align themselves with that of the bank, we see some resignation before their confirmation and all in 1.5 years, even during the training period. If you take that off, overall, if you take them off, or overall resignation is about under 10% in single digits. So we have a continuous stream of experienced people who are able to have who grow up in their ladder to the senior positions. In fact, when I joined as DGM and head of HR, almost everybody in the senior management had joined even before I was born. So I had my own like say issues in like say introducing changes which are brought about at that point of time, particularly in business process re-engineering or technology and all. But nevertheless, everybody, they understand that their total life is aligned with that of the bank, and that feeling being the not just the employee but the owner of the bank really makes them all to give their best and also take every decision in the long-term interest of the bank and not in the short term.
Okay, so Kamakodi, now the question is on the expansion, and before the expansion, I think one very important thing is you talking about ownership. You are instilling ownership in the employees. This particular part is very well set for the companies like Alibaba. Like he has a receptionist who he got the share and she became a multimillionaire. We have spoken about this for, let's say, Kotak Bank or HDFC Bank, which have made everybody millionaire. We have discussed this about Amazon. I think your story is untold because you're doing it very silently. Don't you feel that this story has to be told to the masses, to the FII, the international investors, because where the value unlocking will happen, I believe. Do you feel you are lacking it, or it is intentionally?
I don't know. Like say we are doing our job, and whatever that market needs to know, it ensures that it get to know about that. And when I joined in 2003, I told them at that point of time that when you retire, you should be a crorepati. Around that time only you had that Kaun Banega Crorepati series and all. So I said, I mean, which was a big number at that point of time.
Yes.
And in the 5-6 years down the line, who retired, they said that we are retiring as Crorepatis, which I mean, when I said that, nobody thought seriously about that, but ultimately it turned out to be a reality.
So the foreign, you are not interested in foreign investors, you are not approaching them, you don't want to raise more money, or are they not approaching you? Because the kind of bank you are, I feel that since you're also undervalued today, personal opinion, I don't know whether you're allowed to comment on that or not.
Yeah. See, the FII ownership crossed the 30%. We had one of the higher FII thing. In multiple rounds of QIP and all, the FIIs participated, and we are in, let's say, close touch with the FIIs and all. And when I joined the bank, the price to book value used to be 0.5. Which stabilized somewhere about 2%, and then suddenly went to 3 and came back to 2, now about close to 1.5 to 2, depending upon the market conditions and all. So we are in continuous touch with the FIIs per se, and because of the COVID and all, the number of meetings and travel meeting them and all were restricted. But once since the things are getting lifted, probably after the annual results, we'll be once again meeting them.
Okay, so that's in the plan already. Now the question is, why not North India, Pan India? What is still restricting you to be in the bank known in the South? Are you still thinking that the South is not yet expanded fully, or do we have plans to become a Pan India bank soon?
See, the how we perceive this thing is that, like say, it's not that we are restricting ourselves to south. Okay, today about 70% of my branches are out of Tamil Nadu and about say 85% in 4 southern states. We have slowly and steadily expanded in other parts. So we have branch as far as Amritsar in Punjab, 4 branches. Rajasthan, we have multiple branches. We basically cover the west and Delhi. Maybe we are not very strong in the east, but how we take is that we take certain states. We are good we are able to relate better in particularly the Mofussil areas, tier 2, tier 3, tier 4 towns. That's why, for example, in Rajasthan, perhaps after Jaipur, we had it at Bhilwara, we had at Bali, we had in Balotra. Now we opened in Biawar. Last a couple of years back, we opened in Udaipur and all. Like we have now started expanding in multiple states. How we do is that we started with from after Tamil Nadu, we started with Andhra and Telangana, where we have presence in almost all districts, and now deepening those presence to the like say taluks. At the same time, we are trying to have a district level presence in say Karnataka, Maharashtra, Rajasthan, and Tigwe. Slowly and steadily, we are moving forward.
Okay, so the planning is to be in tier 2 and tier 3 cities. That's your prime focus to start with. Now,
yes.
Current government, which is the central government, is focused towards more of the rural growth. We keep hearing it. You are the one who is seeing it. How do you find it? Is it going to help you to accelerate the growth, or it is all just said in the paper and it is not happening?
See, the definitely in the most efficient capital allocation or effort allocation, for us, tier 2, tier 3 towns are, like say, we are reasonably successful, both in terms of, like say, the availability of, like say, the number of banks and gaps in services and all are far more there. In tier 1 cities, the competition is high. And in tier 5 or tier 6 towns, the business potential, yes, in terms of quantum, it is there. But for a place in terms of concentration of that, definitely it has its own challenges. So far as tier 2, tier 3, and tier 4 are the most sweet spots which we, like say, focus for our expansion.
You still did not cover that government part. How do you see the government policy?
Yeah, that's what I say. The what the government says, definitely. Say the earlier when the government nationalized banks in 1960s, they said everything is in cities and not in towns and villages and all. Now things have trickled down, and definitely the whatever opportunities that are told are definitely there. And like you see differences in terms of the SMEs and industrialization differing at various states. So, depending upon our capacity, aligning with that of the priorities of the government, we go to the places where we get maximum benefit for the efforts that is being put.
Okay. The single most very effective implementation of this government, which has helped the bank, which one is that?
Obviously, the Aadhar and linkage of Aadhar to the accounts. Which even though it was talked about, even though the linkage was talked about earlier in before 2000, like say 14 itself, but the Jan-Dhan accounts and the trust which was given to the Aadhar, even like say by making that even the gas subsidies and all will come through that account and all, which made people to do that, which has helped us to what you call the completion of the KYC. The JAM Trinity, like say Jan-Dhan account, Aadhar, and your mobile phone technology together, which has definitely helped the, like say, increased the ease of banking to a greater extent, which is once again, like say, Aadhar is getting linked to your credit history. It is getting reflected in the CIBIL, which is indirectly forcing the people to be far more vigilant. So integrating multiple, like say, data points together along with the governance, which has definitely improved the what you call ease of doing banking. You have to like say give credit. Nobody expected this much amount of convenience bundling together, say even up to 2014 or whatever.
Okay. Dr. Kamakodi, I live in a city or country where the branches are being closed. The banks are closing their branches because technology is taking over. I think I have not visited the bank in the last 1 year. Probably I would have used the ATM, that's it. You are in a position where now you're going to resume your branches because of the COVID, you did not expand it. At the same time, I'm sure in the 5 or 7 years, you will also start feeling that some of the branches are unnecessary because people have become so tech savvy. Example, where we are still having the fuel, the carbon emission happening, still we are producing the diesel and the petrol engine car. We also have this electric vehicle coming in. So the value migration is happening very fast. How do you see this in the banking industry for the branch and the branchless banking both?
Already almost 95-96% of our transactions have moved to the digital channel.
That's great.
The need for like say the roles and responsibilities of a bank branch has definitely changed in the last like say 10-15 years. Absolutely, there is no doubt about it, particularly after the arrival of ATM network, and then even now the KYC checks have been now shifted to online. All these things are happening, but at the same time it will not be zero. Whenever somebody has a problem, you can't get all your problems solved over your like say internet banking or mobile banking or through your call center. You will be requiring to meet somebody face to face, maybe once in your lifetime or whatever it is, for which the branches will be a reinforcing point for that relationship. Number one. Also, the branches are pretty much needed to take care of the borrowers. So when I am like say financing to the like say SME, say for example, I have lent money to people in the bazaar. I need a system to physically, like say, I may be having a control over their bank account or whatever it is, but then a physical check is needed to have a control over the existence of the branch or business, how they function, and you need a touch point on that level. So what has basically happened is that the number of persons working in individual branches will decline. The one branch which could have seen only 3 kilometers radius in the past or something like that can take care of 30 kilometers going forward. Like that, the span of the branches will increase. It will definitely reduce, but it will not become zero. So whenever we open our branches going forward, we have to see that we open at multiple locations which are far away to have a span of control over the vicinity where we lend money.
Kamakodi, one bank which you find as one of the biggest competitor for you, let's say one in India and one in abroad.
See, obviously, let's say in overseas, since I don't have any presence, I need not bother more about them. Definitely, all new generation banks, like say, we found our capacity, or we had to run to find our efficiency, mainly because of the arrival of new generation banks, be it HDFC Bank or be it ICICI Bank or be it Axis Bank and all. Since they did not have a baggage and they came with deep pockets and all, they could completely have a paradigm shift in the banking, and we had to keep certain things, whatever we have learned over a period of time, and learn from these new generation banks and create a mix in such a way that we are able to create value for our own stakeholders, including customers.
Thank you. Coming to the work from home policy, I'm sure in the COVID, your employees would have also worked from home. What's your view on the work from home or the flexible working desk in the future for the bank and banking employees?
See, it won't be, like say, my wife has a complaint when all our relatives claim that they are working from home, and we bankers got to think that, like say, I did not work even a single day from home. So as a part of essential services, we were asked to come to the, like say, bank to a greater extent. since our people were coming to the branches, I had to, even though technically speaking, controlling office people can work from home, I had to come to the office to give at least give the proper perspective. The even during the period and all, like say, there were period when only 50% people can be there, 30% people can be there, and we were able to like say integrate the technology in such a way, particularly during the COVID period. So we had what the instruction what we had given to our own staff members, those who are working from home, was that they had to make, like say, we gave the like say everybody had an app. It used to the branch customer and the phone numbers will be continuously getting displayed. They had to continuously talk to the customer and inquire the well-being. Are you safe? Any help is needed. If you are not got into internet banking, mobile banking, you migrate. We will arrange for that. Now the instruction is that don't come to the branch because the you may get exposed to COVID and all. Or if it is a borrower, like say, don't worry, these are all the government schemes that has come like that. We used a full 3 months lockdown period when all our team members had to talk to our customers, establish a rapport, give them a comfort that everything is fine. And also after some amount of comfort had been reached, understand what was there in their mind, how do they expect the future of the business and all. To make some surveys and all we used. So to the some amount of follow-up thing, maybe about 25 to up to 1/3 of the work because can be done from home.
Okay. Maximum time you spend with which division of the bank?
See, basically, like 2 areas will like say the which I will be spending is. One, of course, with the credit risk and HR.
Okay. So sales, you because it seems like you have automated the sales process.
Honestly speaking, we did not have sales as one of our DNA till the COVID.
That's what
now we had to talk about the sales now because. 50% reduction in the workload happened during the COVID because of people migrating to non-branch channel. We have to introduce the sales.
Okay, I felt so. That's why I asked this question because we've been talking about process, and because when it is the my lending business, if you are lending money, people are coming. The more important challenge is to basically recover the money which you guys have mastered in the art. 20 years down the line for Dr. Kamakodi, what do you think personally you see yourself?
In the sense, like say, I mean, you are asking for the bank or you are asking me personally?
Both. First, I'm asking about you as a personally.
See, as a person, so when I will be, like say, crossing 65 or 70, I should be matured enough to, like say, get, like say, into more spiritual aspect, particularly in. Like say, trying to learn Advaita Vedanta more in a proper perspective and also in follow. So we have some amount of, like say, minimum exposure now, trying to get how it is happening, all such things and all. Maybe post-retirement, I should be plunging more into that to get a grasp of what it is, God willing. So that will be on the personal side. If you take the bank, we have been consistently saying we will never claim to be we are one of the largest bank in the country. So our focus will always be we are one of the efficient and profitable banks coming in the, like say, top quartile or maybe top 10% in the return and profitability matrices and efficiency matrices will be what I would like to position the bank in that perspective.
Okay. Thank you. Thanks a lot, Dr. Kamakodi. I think we hit exactly 1 hour and you have helped us with a lot of insights about the business. We saw that you have developed detachment with the business. That's one of the great quality ones. I think the culture is very important. The last part, which is I think on the interest rate, the interest rates are on rising. And I don't know how India, RBI will take care of it. the inflation also, I'm sure you're seeing what's happening. But I think US has planned something around 6 rate hike, and then the next year again the rate hikes will happen. And what we are from opinion that it helps the banks in the short run. How do you see this macro economic cycle helping the bank? Is it going to come as a big headwind or tailwind?
See, it is a part of the cycle. Even in my 18 years of experience, it is perhaps going to be 4th or 5th cycle. It happens alternately. So you have to just keep going there. You have to look beyond the cycle. So whenever the interest rate increases, yields increase, at the time cost catch up over a period of time. So you have some amount of cushion in between. At the same time, your opportunities to book profit in the treasury evaporates. So net of net, if the interest rate stays at higher level for a longer period, it adversely impacts the health of, let's say, a few businesses who are finding it difficult to match the cost and their income. So it's an alternate phenomenon, which is like Adishankara's Bhajagovindam, Punarapi Jananam, Punarapi Maranam. So you will have the increasing rate and decreasing interest rate comes alternatively. It happens. Not to take too much info or worry about this cyclical effect, which always is bound to happen.
I think when your customer is in pain, you must be telling them to go through Bhajagovindam. That's the way you are running the business. Absolutely a role model. Dr. Kamakodi, the last question on the technology front. Sorry, this is not the last question. I'll take more. On the technology front, what are you doing exceptionally? Because now the technology is the way, right? Are you opening accounts online? Can I open an account with you without even coming to India?
Yes, yeah, you can't regulatorily open an account without coming to India. But within India, you can open without coming to a branch anywhere in the country. So the now online account opening, online KYC verification is now permitted, and we were one of the first banks to come with that. Every day we open, like say, hundreds of accounts online. We have that's a like say that has become the part of the thing. So we originally started, when I joined the bank, we had branches which did not have computers working on manual. We had branches which were working with the DOS platform, and the core banking was just coming. So now we were one of the first customers of TCS banking, one of the first banking customers in India. So we worked closely to develop the core banking. Then we migrated to banks, which is also now one of their flagship products, also being used in the larger bank like State Bank of India and all. So from there, we migrated to business process engineering, digital channels like internet banking, mobile banking, along with the like say ATMs and BNEs. And then now we have the integration of APIs and things like that, and integration with the fintechs, the like say digital decision makings and like say credit decision making and all, like multiple such in tune with what is happening in the industry. We are also like say closing with the running with the best.
Coming to treasury management, because I saw you booked a lot of profit on treasury already when the interest rate went to zero or went down. You're again talking about gaining good in treasury when the interest rate goes up. Am I correct? If I heard you correct there?
I mean, treasury profit, I meant appreciation in the proprietary bond book.
But if the interest rates,
so as a part of SLR and SLR, we need to have a proprietary book whose valuation will appreciate when you get into the decreasing interest rate scenario, and the valuation will decrease when you get into the increasing interest rate scenario. So when you are getting into a decreasing interest rate scenario, you will have opportunity to book some profit from the appreciation, which you lose now.
Yes, so that will be a headwind for you, right?
Headwind. Okay. That will be headwind when you go through the increasing interest rate scenario, but which will be the tailwind will be the expansionary margin.
Okay.
Increase in your yield.
Am I right to comment that you are one of also well-managed bank on treasury side? Is that correct? Or
yeah, Yeah, the conservative stand which we had taken in the past, by and large, like say, there were not many negative surprises, and basically from the lessons which we learned somewhere in 2004-5, when the bond yields, 10-year yields came down to about 5.2 or something and started moving up suddenly, when many banks had to cut, have a lot of losses, and which resulted in many old generation banks losing their, let's say, which could not survive, at least half a dozen banks at that point of time. From that point onwards, our time-tested policies on risk management had ensured that we were never caught off guard.
Okay. Thank you, Dr. Kamakodi. I think we have taken much of your time. We wish you all the best for the quarter, and we'll soon look forward to see the quarter result. Obviously, that's one number, and I'm sure a lot of growth to come from the bank. Thank you for taking out time and meeting us and meeting our investors. Have a great day.
It's my pleasure. Thank you all. Thank you.
Thank you. Thank you all the viewers for being here. That was Dr.N.Kamakodi for City Union Bank CEO, and he was telling all his personal story in the professional front, how he's been running the bank for so many years, and what's the future for the bank, and how traditionally the family run business, they're like been third generation bankers. There are 7 CEOs in the bank's 100 years history. 1904 the bank was started, and I think it was a story which is still untold, and it is for us to know more about the bank and appreciate the work which the bank is doing. I'm sure the market will take their own course and take the bank. They appreciate the banks and the bank's employees' effort. And I'm sure as people are moving to the equity market from the property side, the stock market will also appreciate the value of these small but well-run bank. And 10,000 crore is a number is already touched. We wish the bank to be on 100,000 crore bank and quality is always first. We don't see that to be compromising. One also very important thing is that the ethics is coming from the mutt, which is the very close to the heart of the Kumbakonam, where Kachi Kumbakonam mutt, which has been the instrumental. So I think that's very important, that the culture is so deep rooted, and if that culture is there, I think wealth is just a number. And we also say that where the Lord Vishnu resides, Lakshmi has to be there, and they both come together. That's what I've been telling you in our webinars and our seminars also. So I think it's a great example. We found one bank is actually doing that. It's a big company and it's not easy to run. And then I think that God has been kind. And Dr. Kamakodi, thanks again. I think have a great day and wish you all the best for the bank. Friends, we are just signing off now, and we'll post the video on YouTube. Please have a look when you want. Thank you, Dr.